Hello, my name is Nedu, your forex coach. I made a call on the GBP JPY, that's the pound yen buy call this morning on my Signal channel, and I decided to do this video and make it public so you guys can take advantage of this opportunity to trade and win today. All right, this on the 4-hour chart of the pound yen. If you observe, you can observe some patterns. First, let me put you through the dotted horizontal lines. These are weekly and monthly support and resistance levels. Some people call it demand and supply zones. Okay, but I choose to use the lines just for clarity. But I understand that they are zones. The support zone is a range of prices. Okay, it's a range of prices, but I know how to apply it. I like making my chart to look simple and then clear. You can't see any indicators right here. There are no indicators here. It's just pure price action. And if you want to win consistently in the market, you have to do this. Okay, and if you're interested in training on engulfing patterns and how to analyze higher time frames and trade on the higher time frames, you can call in and book for a training on this. It's just very simple, something everyone can apply and trade daily as opportunities show up in the market. All right, so let's go straight into it. You can see this very aggressive price drop from this level. Let's mark it out. Okay, let's mark it with this. Okay, from here down to this point, price pushed back up to this level and then pushed down. I'll explain what actually happened here. Okay, price moved from this level of resistance, as it were here, penetrated the previous level of support, it broke it, got to this level of support, and then it held, pulled back to this level of support, which previously was support, and now it has become a resistance. But there's something you can see here that gave us a signal to trade it back down, was forming this ABC pattern, structural pattern in the market. All right, so using the Fibonacci tool is the most used tool for every trader. I recommend it that you use it every time because it helps us to determine turning points in the market. It helps to determine turning points in the market, looking at the various levels, reversal levels where market can reach. Price does not go in a linear, it doesn't move in a linear form, it moves in waves, right? Zigzag, stuff like that. Okay, and when price makes an impulse, very aggressive action, either in the bearish or bullish direction, of necessity it will do a pullback, and that's what the Fibonacci retracement tool seeks to support a forex trader in identifying most likely levels that the price will turn back. Okay, so for me, the most consistent and most likely reversal levels for me on the Fibonacci retracement tool are being the 50% and the 61.8%. So between those two zones, I mark it as a strong turning point. Of course, I know we have the 23%, we have the 38%, okay, we have the 78%, we have 89%, we have the 100%. I know those levels, but this particular two, the 50 and 61.8, have been more likely zones where the price will retrace. So let's use the tool now. This was an impulse, price pushed down to this level. Okay, and let's see what happened. My line here, this red line, is a 50% retracement of this move, and then this black line here is the 61.8. So I try to form a zone between those two retracement levels. All right, so you can pick this and mark that zone. Okay, you can see what happened. It was in between. It's not exactly on the 50%, and it's also not exactly on 61.8%, but between 50 and 61.8. When market pulls back into that area, there's a strong likelihood that there will be a retracement, and that's what we see playing out here on the 4-hour time frame. You can see it got here and pushed all the way down, giving us an ABC, pattern. All right, and this perfectly worked, delivered, because you're going to trade it after the signal. You can see the signal candle there. You can see the signal candle right there. This is the signal candle. This is the bearish engulfing here. So immediately after it, you take your trade. If you did that, we traded it in a channel, and this gave about 559 pips, and this happened in so many days, maybe 2 weeks. All right, so if you're a position trader, you're a swing trader, you can actually be on a trade for a long time and continue to milk in the profits potential of that particular setup. You can see. So at this point, this the level of support. Look at how the market respected it, got there, and they pushed all the way back, right? Before you have this strong bearish engulfing again, which you could have, maybe if you were not able to enter the trade right from the beginning, you could have also seen an opportunity to trade from here down to this level. Okay, all right, so this is it. We have taken this signal, so let's mark that signal, bearish signal there, bearish engulfing signal, and this played out exactly. So let's clean up the mess. Let's clean up the stuff. Let's remove this and use the ABC, which is from here, A, B, and C. All right, so that is it. This is where it started, from 0 to A, B, and C. Now, what's happened when this finished, the C leg ended, we saw again another surge in price. Price moved all the way back from here straight to the previous level where we started. You can see this supporting that zone. You see, level of support, it became resistance here and became under resistance, and we traded. This was the last call that we made on the pound yen. It was the last call. I can also show you that we made on the pound yen. All right, so if we're seeing another ABC pattern forming, but let's wait first. Price moved all the way down to this place, so we can draw our line to this point. So let's use the retracement tool, the fib. From here, drag it from low to high, the high point. You can see that this is exactly within the zone. The price pushed into that zone. We're going to highlight it, which is the 50% to 61.8%. So when market price pushed into this place, we had about 4 trades running from here all the way from here down to this place, and the third one we ended it right at that support level, which is most likely to be where that retracement will end. All right, and it actually ended. It actually ended here. You can agree with me. This is a support zone, and this candle is a signal candle, and here is a small bearish candle, making this a strong bullish engulfing pattern, suggesting that price would most likely surge, in the bullish direction. All right. When I saw this forming between my zone, retracement zone, I made a call from this point, 166.049. I made a call on our signal channel, which I'm going to show you this is our signal channel. This is exactly the signal sent out for our paid students to trade with, exactly from here, 166.049. This was the exact point that we started to buy the markets. All right, okay, you can see so far this has done. Our TP1 has been hit at about 65 pips. Currently the market is on 94 pips already, 94 pips, And this market has a huge potential. The first lap should be able to deliver. At least we're going to get back to this level again. All right, where the market started making move. That's about 280 pips. 280 pips. But if the third leg of the ABC should form, we'll be expecting the market to get here. So what do? We're going to clone this, expecting the price to move the same way from here to here and do it from here up to this place. So we're going to clone this so that it will not be like you change the spacing. So let's clone it, all right, from all the way down to this point. You can see it's ended right at another key level. Like I said, we're going to trade it from here, first lap, to this point. Wait for another signal that will encourage us to take further price actions to this level. All right, this blue line here is another take profit target. Another profit target here. All right, and after here, another profit target, and then we're going to end it exactly on this point. And this is expected potential for this market. Oops, 520 pips. And I want to take advantage of this. I'm giving this to everyone. This is free. If this works for you, you can like the video, and then you can also call us, subscribe, or you may want to have a short-term training on this particular strategy. I know you enjoy this. Please do a hit on our hit that subscribing button on the Telegram channel. Thank you so much for watching this. I'll see you again in our next video.